Welcome, Sandeep. Thank you for being part of the show today. And we know.
Congratulations for the entire team of VT now.
Thank you.
And I have been old supporter of VT now.
Yes, you have. And we were just reminiscing. In the last 16 years, the markets have seen so much. The world has seen so much. Yet you've made just phenomenal returns. If you just did nothing, that's all you had to do.
Correct.
Are the next 16 going to be like that?
Okay. It's very difficult to visualize exact 16 years, but if I have to look at India, okay, it's a very interesting data I'll show you. Like a lot of people forecast earnings. What will be earnings for 5 years, 10 years perspective, generally look at in numbers. We as Quant, from a behavior perspective, we try to forecast the multiples. Okay, how we define multiple through perception analytics. Okay, so again, interesting thesis which we have built. India perception has changed. Something has dramatically changed in last few years, and if I have to say that India perception when has changed, and which means the P multiple of Indian stock market will remain elevated from longer term perspective. I can say with good amount of confidence, at least till 2047 when demographic cycle peaks out in India. Till then, India P multiple remains elevated for maybe you're talking about another 22 years or so. So it's more than 16 years I am saying that India multiple will remain high, which means earnings will expand, but P expansion is very important. So as long P remain elevated, the probability that you make good returns from the market.
Sandeep, last 16 years have been, we've had magical moments. Jam Trinity, financial inclusion, Made in India, Startup Mahakumbh, which really could be the big factor at play. What could be that secret ingredient or secret sauce which in a sense will bind Indian markets forward?
I think what has changed in last maybe, if I have to say in this Modi's decade, okay, it's about same thing, India perception. The young people, they're not only the risk appetite is clearly visible, they believe they can demonstrate few things. The neglected people, they are coming back, and that is a big force to reckon. Like people talk about China is about their government, they're doing it. Here the entrepreneurship, and we are seeing for the first time this level of entrepreneurship even from the institute. People want to start their own companies, not join the companies, So that something has changed, and I think financial inclusion has played a very important role in this whole journey. The first time, maybe, in fact, I'll say even 2020, though we remember as a COVID issue, but I think something got changed in 2020. A lot of people were sitting at home. First time they analyzed their investment, and the expenses was not there. I think that was a change moment where people started focusing on investment and the wealth got created. Now that M2M gains which they are retail investors sitting is very meaningful, and that is actually driving. So I always say every bull run is driven by some leadership. This time leadership is retail, and retail base is very large. So if you can say maybe a decadal opportunity from a returns perspective, maybe we have seen just 5 years or so for the current decade.
But Sandeep, since you are so much into psychology of the markets and market participants, retail also comes with panic. Retail also comes with every news flash and reacting to every news flash. I'm not talking about the mutual fund corpus money, but I'm talking about more active participants in the retail
So
market.
I tell you where I always try to refer, this is some interesting work which we have done, When you talk about retail investors, it's actually jumbled up, okay? Anything which is non-institution is considered as retail. Actually, it is not. You have to differentiate that component from a HNI, family office, ultra HNI. And I always said that retail is like since we manage public money and we have 96 lakh investors now with us, folios with us, we can always see exactly at the bottom of the cycle, they're buyer. They're not getting panic. Who is getting panic? The people who are doing business, okay? When I differentiate investor versus business, anybody who looks at their M2 on daily basis, okay? For them, this is the business. And hence, even market fall 10%, if they believe that market can fall another 10%, they will exit. Where retail investor is not. So you have to differentiate the type of investor. Investor don't panic so easily, but somebody is doing business, which is the case for large family office, ultra HNI and HNIs, okay? That segment's panic. We have, if I have to look at in last 1 year redemptions at our end, just do a redemption analysis. Majority of the money, if I say maybe 2/3 of my redemption is coming from HNI and family office. Okay, only 1/3 comes. And that also very interesting. Within 1/3, majority of redemption which coming from real retail investors is come from direct line, not through regular route. Okay, they also need hand holding.
Absolutely. So what's the mood in the market right now? Because the news flow, the noise around geopolitics, domino effect on crude, tariffs, it's so high. But if I just look at the index, in the last 28 days, the index has done nothing.
Yeah.
We've moved in just a 600-point band.
So one way of looking at the turmoil or geopolitical volatility, other way of looking at, we have seen India-Pakistan tension, we have seen trade war, we have seen now Middle East issue further escalating. Market has actually given you some positive returns.
Resilience.
Okay.
Yeah.
And the confidence is coming back. If you really look at September, October, and particularly January, February, first quarter, where some amount of capitulative move we saw in the market, I think that is changing and confidence is coming back, and then market realized that India is the most safest place. In fact, 3 months back we made this call, not only from India is a risk on rally and globally it's a risk off. But what is very important is the decoupling process for India has begun. We believe India has now decoupled from global market. That's a cycle which we have been talking about in 2025 it begins. And we have seen now the decoupling process has begun. You look at the impact what happened in the US market, we have hardly any impact out here. Okay, and the turmoil which we are seeing, with the first country used to get affected purely from a crude perspective. And if you really look at this time also, crude has also spiked very recently. It has only because of very recent phenomena we have seen the impact. Otherwise, crude also has been pretty stable.
So we are jumping from long term to short term. We've got a short term view. Let's talk about the long term view. Long term view is that the P multiples will remain elevated. India becomes what could be called as a special situation stock. What could be the next aha thing for India? For example, coming back by the SIP investor has been the aha moment. Digitization has been the aha moment. Make in India has been the aha moment. What is the next aha moment for India now?
Very difficult to visualize at this point in time, but only thing, the way I look at them from a regulations point of view, say we just introduced we can talk about our industry, SIF, the Specialized Investment Fund, a new category, okay? And obviously, it's like we were the first to get that approval, but what is very important is that new segment is coming where it really help you from a diversification perspective. Okay, so you talk about like globally, okay, when you talk about H1 criteria, people trade or the prop desk or the high frequency algo, I think with SIP route, a short-term investment thesis will also gather momentum, that how you can make money in the short-term perspective also, how you better manage your returns also, how well by diversification through SIP route also you can create better risk-adjusted book. So I think new instrument which is coming, which was not the case. Let's say some of these instrument was the part of only the HNI family office or the big ticket customer. I think now real retail customer will also be able to participate through SIP route and some more products will come. So I'm more excited that you will see innovation coming through product. Technology is obviously playing a very important role. Cost is coming down drastically. So your at the overall investor will be large beneficiary when cost. We started 1% brokerage, today we pay few bips. Okay, so that's a game which has changed with the help of technology, and people are willing to put money. And what is very important when I talk about perception has changed, India, like people, retail investors are more convinced this time, and I am saying they have become much more mature than as compared to what I have seen in 10, 20, 30 years. We used to always say now, Gaon comes at the top of the cycle, the real retail comes at the peak of the cycle. And that was the phenomena which we used to always observe. When retail participation moves up significantly, it's at the peak of the cycle, okay? But this time something has very different. Retail has not panicked, okay? If you really look at, they are not getting capitulated so easily. It is the more sophisticated investor, they are panicking much earlier because they are more smart and they are more educated.
Leveraged.
And leverage, okay? Yeah. So it's a phenomenon, something which I think we have to really respect. The real retail investor is coming, and they have patience now.
So what falls into your buy and hold category for next 5 years? 16 years is a long time.
Yeah, I agree.
But next 5 years?
So 5 years, let's say, given the geopolitical turmoil, we also believe that beginning of the year, say next 5 years also is going to be challenging from a global perspective. Hence, I like to be more focused on the domestic economy, okay? So power is the theme, okay? Power remains buy on dips, it's a decadal opportunity. So if next 5 years, I think by 2032, I think power stocks should do well. All energy baskets should do very well. Then I will more bullish on the India infrastructure space, okay? Not just EPC companies, large infra plays, okay? Whether ports, airports, even you can say EPC company, also large infra names which should be a biggest beneficiary, because we have seen irrespective of state government also, the infra spending has not cut down. I think we are in a massive investment phase in India. So that's a space which we like. And obviously if infra does well, then logically materials should also follow. Okay, so I'm saying first infra followed by thing. And consumption as a theme is also coming back. I think the tax benefit which government has given, the RBI recent cuts also, I think will also boost the consumption. So a lot of consumption stock which have been neglected territory, or they were erstwhile admired territory stocks. I think those are the names one should look at. Hospitality space we still like, whether talk about hotels, hospitals, okay. So those are the area, services industry also. We want to see something new now, okay. Like all those names which has been an admired territory for last few years may or may not give you that sort of returns going forward. So I will look for a under ownership. I look for a attractive valuation and research, or let's say uncovered.
So
okay.
we got a graphic which captures some of your fantastic stock picks. As Quant AMC, we've looked at, and it's got a limited history but a rich history. A rich history of some stocks which they've identified. Aegis Logistics, Jio Financial, Adani Power, Britannia, just some of the stocks where you've really created a lot of wealth for unit holders. This is 2025. Imagine if you're having this conversation in 2030, which are the 4 names which would be part of that list?
So if you really look at...
am I missing one any name? Or
I'm sure
there's
many in the list.
But if you really look at, out of one is the clearly logistic is the infra piece we talk about, power energy we talked about. I think as well talk about the digital bank or DG bank will be reality. Because I tell you, Nikonj, I always say, that why a lot of people think that we are very negative on the banks. We are not negative. We think globally the P multiple of the global banks has peaked out because something is changing. With CBDC coming into picture, and India will be the first to implement that, is already implemented partially, the relevance of commercial bank will decline. This intermediary role which is there will decline. They will re-emerge in a different form. Okay, and that's the reason we have Jio in our portfolio, because we think digital is something which, anything related to digital movement thing or DG bank as a concept will gather momentum. So you have to identify the names where we are more bullish on the digital as a space, because this question comes, you don't own, you are grossly under own or underweight on the banking space. So we think, because when we talk about perception, we always say earning expansion is important, but P deterioration is equally important. If we believe P deterioration globally has begun and people in India are not willing to accept that reality, that's the way we look for that opportunity.
Sandeep, the one space where you've been a long-term bull is pharma.
Yeah.
But things are changing there because of this big overhang of tariffs. I don't know what is going to happen over there, but how do you tweak your portfolio?
No, I look at it just very simple. I've seen the comments on the best of the analysts, but I'm quite surprised. Let's look at from US perspective. When I'm talking about India generic. Okay, maybe we are the largest, 60% generics comes from India. What is the substitute for US? Is Bangladesh can give, or Vietnam can give, they will definitely not take from China. You need USD approval plants to buy medicines. See, you can defer, you're buying a car for 2 years, you can defer buying clothes for 6-8 months.
Not having a medicine.
2 hours you can't defer,
Yeah.
okay? So I don't think, it's a very simple common sense if you use, I don't think they have choices, okay? And if you read between the lines what Trump said, Trump is talking about penalizing innovators, okay? Which is not the great news from a long-term perspective for US also, because that's the way innovation happens, okay? So he's trying to say, innovators are making extraordinary money, okay? And a lot of innovators are sourcing from other countries like Switzerland or Ireland, and then their margins are 50%, 80%. I think even 10-20% tariff comes there, they can easily absorb, okay? So, and the pressure will come more from the insurance side, distributor. I don't think Indian generic will absorb that cost, they can easily pass, okay? That's my very simple thesis. And if you talk to people who are there, he said if we stop, US isn't a problem. So I think what we have to understand, it is their necessity things, okay? They cannot live without that. And even generics are 78 to 98% cheaper than the normal drugs. Okay.
Yeah.
So even you put 10%, 20% tariff, they will be able to pass. It doesn't make any difference. Okay. I think it's too much noise. I think for me, it's a buying opportunity from the generic perspective.
So what is the birthday gift for our viewers? We have a return gift for you. Which
We don't want medicine. You can give us pharma company names.
Invest in Quant mutual fund, Quant Flexi Cap. That's a birthday gift for you.
Okay, but we have a return gift for you. And Sandeep Tandon, 16 years of his journey.
The before and
The
after.
before and the after. And let's really look at it. And Sandeep, you may want to look at it.
Yeah.
There you go. And it is coming up.
There.
There you go.
The middle
Last
frame.
16 years, how Sandeep and our equation and how our relationships have moved. Sandeep, you still look the same, man.
I can't even tell, yeah.
You still look the same.
Bit old.
Well, nice to
That's
have
a
you.
natural
Thank you for
decay.
joining us on this special day
Yeah,
of past
thanks,
So
16
for the
Really
next
years.
5 years, if someone has to park their money right now, flexi-cap funds?
Yes, Quant Flexi Fund. You should put money.
Quant, yes, Quant
Yes.
flexi-cap funds.
That's important.
The plug.
Thanks for
Okay.
calling me.
Let's take a break with the news that we're just getting warmed up on this very special day. We've looked at what's happened to India, where the multi-baggers have been, but where the multi-baggers will be. From where to will, and from how to where. I think that is the theme today. And we've got a special lineup from Prashant Jain to Madhusudan Krikela to Ramdev Agarwal. It's all happening today on ET Now. It's a special day, and we just want to make it special for our viewers.